they've gotten the price of the vehicles down to kind of no-brainer levels from a competitive standpoint. You know, they've got the base Model 3 sedan now is at $39,000 or under $39,000, you know, which is $9,000 less than the average car purchase price in the United States, and right there with a Toyota Corolla.
If our car cost the same as a RAV4, no one would buy a RAV4, or at least they would be very unlikely to, said Tesla CEO Elon Musk. But since many American car buyers can't afford to wait for a tax credit, Musk said that our car is still much more expensive than a RAV4 when you look at it that way. In the realm of automotive innovation, a trailblazer emerges that defies convention and redefines the essence of driving: Tesla. Casting its electric glow across the globe, Tesla has made a historic rise to the top of the car market, all thanks to its cutting-edge EVs and advanced energy solutions.
All of a sudden, what, 4 or 5 years ago was a luxury kind of neat to have gimmicky type of thing to own a Tesla, and it was very expensive, is now, right there on par with buying a Toyota Corolla. And who would have thought that we could get there? This is a massive, massive move from a company that gets most of its purchases through online channels, especially Tesla.com. So seeing those web visits at all-time highs in reaction to these price cuts tells us Tesla is creating basically a one-horse race and expanding the lead in the EV market, and now is just becoming a matter of time, we think, before it's just the dominant automotive company, period.
Led by Musk, Tesla's rise has been meteoric, punctuated by the groundbreaking debut of the Model S. This automotive marvel marries energy efficiency with blistering acceleration, wrapped in a design that leans to the future. Tesla's price cuts through the previous months came as a shock to many. Tesla cut prices. While the reasons behind these cuts are numerous, the company will bring in less revenue because of them. Due to fixed costs, its best-in-class profit margins will take a hit. Because Tesla has more wiggle room with its margins than others, it can afford to make less money on each car it produces. This allows it to essentially undercut electric vehicles made by more premium competitors while bringing its prices closer to other EVs like the Mustang Mach-E and Chevrolet Bolt. Now, however, Musk believes that there is a more pressing concern. Musk said that he was concerned about the impact of high interest rates on car buyers, adding the electric vehicle maker was hesitating on its plans for a factory in Mexico as it gauges the economic outlook. After the company missed Wall Street expectations on third-quarter gross margin, profit, and revenue, Musk said he wanted to get a better sense of where the company was headed before going full tilt on the Mexico factory. If interest rates remain high, it's that much harder for people to buy the car. They simply can't afford it, he said on a conference call with analysts. Notably, Tesla has managed to maintain demand with a series of price cuts, but Musk spent much of the call voicing concerns about further expansion, saying that he was afraid rising interest rates would make cars unaffordable. The price of the popular Model Y SUV was almost unchanged for consumers even after Tesla's price cuts, Musk said, accounting for higher financing costs. It can be recalled that Tesla announced its plans for a new factory in Mexico's northern state of Nuevo León in March. It was further disclosed to the public that the state government estimated it would cost more than $5 billion, although Tesla has yet to share a capital cost forecast. When asked for details about the factory, Musk said, "I was scared by 2009 when General Motors and Chrysler went bankrupt. I don't want to be going at top speed into uncertainty." He also said that there would be enormous challenges in reaching volume production for Tesla's long-delayed Cybertruck pickup and making it cash flow positive. Simply put, Tesla's Q3 2023 earnings call has been an eventful one, with CEO Elon Musk making several newsworthy statements. Among other things, Musk has been looking ahead to the automaker's future and notes a concern for the current state of the economy. Specifically, he expressed concern about the current pattern of high interest rates. "I am worried about the high interest rate environment that we're in," Musk said during the Tesla Q3 2023 earnings call. "I just can't emphasize this enough, that for the vast majority of people buying a car, it's about the monthly payment. As interest rates rise, the proportion of that monthly payment that's interest increases naturally. If interest rates remain high or even get higher, it's that much harder for people to buy the car because they can't afford it." Musk cited the high interest rate environment as he expressed concern over potential sales of vehicles like the Tesla Model Y. He also noted that while the Model Y boasts some high-end features and a long shelf life, it does come with a higher sticker price than the average vehicle, as do many other Tesla cars. Musk's statement came in the wake of Tesla reporting a 17.9% Q3 2023 gross margin, with gross profit down a whopping 22% year-over-year. In terms of economic uncertainty and consumer sentiment, here's what Musk thinks. I think there's still quite a few shoes to drop on the bad credit situation. Commercial real estate obviously is in terrible shape. You know, credit card interest rates are usurious with over 20% interest rates, which over time becomes extremely punishing. He further explained that he didn't want to go into top speed into uncertainty. There are a lot of wars going on in the world as well, Musk said before adding, I apologize if I'm more paranoid than I should be, because that might also be the case, because I have PSD from 2009, big time, and 2017 through 2019 was no picnic either. So, you know, the auto industry is also somewhat cyclic. People hesitate to buy a new car if there's uncertainty in the economy. Talking about cost reductions for Tesla, Musk likened it to the likes of Game of Thrones for pennies. He explained, as a first approximation, if you've got a $40,000 car and roughly 10,000 items in that car, that means each thing on average costs $4. So, in order to get the cost down, say, by 10%, you have to get 40 cents out of each part on average. It's a game of pennies. It does feel like digging a tunnel with a spoon at times. Speaking of which, Tesla's aggressive price cuts this year have battered its gross margin, particularly in China, where it faces stiff competition from local automakers. The company is trying to survive the price war it started, mopping up any global demand for electric cars, even as high interest rates and lower price tags at some rivals mute EV sales. Some analysts have said it may need to cut prices further to achieve its annual production target. In the third quarter, gross margin fell to a more than 4-year low, and the company signaled it would keep cutting production costs to boost profits. Still, it stuck to its annual production target of 1.8 million cars, a sign that the price cuts were buoying demand to an extent. The big question is if this is just a blip or signs of a bigger shift among consumers as rising interest rates and a weaker economic backdrop discourage consumers from making big-ticket purchases, said Jesse Cohen, senior analyst at investing.com. Its stock has more than doubled this year after a slump last year, as investors bet the company will fare better than rivals in an uncertain economy and get a long-term margin boost from its self-driving software. But the shares are still about 40% lower than its record high reached in 2021. Still, many are convinced that Tesla's strong growth is likely to continue despite high interest rates. For now, Tesla's growth is likely to slow dramatically in a high interest rate environment. After all, vehicle affordability suffers in high interest rate environments because consumers often finance their vehicle purchases. But investors betting Tesla's growth will take a hit may want to think twice. Why? Well, there are several reasons Tesla could continue growing rapidly even if interest rates remain high for a multi-year period. One of them is the launch of its long-awaited Cybertruck. The all-electric truck, with its polarizing design, has garnered more than 2 million reservations according to estimates. Also, EV sales may continue growing nicely because of market share gains, even if the overall auto market suffers because of a high interest rate environment. Furthermore, Tesla can aggressively cut prices while still remaining profitable. Because the company is the most scaled electric vehicle maker in the US, it's able to use its economies of scale to lower prices to help offset some of the headwinds consumers are facing from higher interest rates. Subscribe for more.